Okay, hey everyone, it's Mike Valtos, and welcome to the special presentation on user-submitted questions about Orderflow and the Orderflows Trader software and Delta Scalper software as well. So, these are just questions that have come up over the last couple of weeks. I get the questions here and there. Usually, I just try to reply directly to the user, and I try to save them on a file, and once in a while I try to make a video on it, just so in case you got the similar question. You'll see your answer. But before I jump in, brief disclaimer, and this should actually be question 0. Why do you have a disclaimer? Why are you wasting my time? Well, it's because you got to realize risk is involved when it comes to trading, and and there's money involved in trading, and you shouldn't be trading if you can't afford to trade. Now, that said, trading is not only for the rich and famous. Just be aware that you can lose money when you trade. I don't want people coming in thinking that what I'm selling them is some silver bullet that's going to solve all their problems and turn their PC into a cash machine. No, that's not at all what Orderflow is about. Orderflow is about reading the market and understanding and making your own trading decisions. So this presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, that's out of the way. So, question number 1. Again, there's no order to these. These are just questions, and I've just been saving them up and putting them in there. So, should I use 400% as the ratio in determining a market imbalance? Well, you could use whatever you want, but 400% seems to be the industry standard by most traders. And when you're talking about market imbalances, right, that's these numbers you see on the order flow chart, either red for a selling imbalance or blue for a buying imbalance. And on the order flows trader, you can adjust it. You go to the order flows trader when you pull up the indicator, and it's right here, 400. If you want to make it 300, you change it to 300. You want to make it 600, you change it to 600. You want to make it 1000, you can change it to 1000. Okay, boom. Now the other choice you have is this imbalance volume threshold. So on this particular chart, I have it set at 1. Normally I like to have it set at 50. This is a British pound, so I know the volume is not as big as the E-minis. So if you set it at 50, you're going to get a minimum of 50 lots has to trade for there to be an imbalance registered. So if it trades, say 3 lots against 49 and it's set at 50, it won't show the imbalance. If it's set at 10, if you got 1 against 11, it will show up. So it depends on if you want to put a volume threshold on it or not as well. So again, what do you want to use 400%? Again, that's the industry standard, it seems. Most people use 400%, but doesn't necessarily mean everybody uses 400%. I know one person that uses 1000%. I know some people that use 600%. It depends on your trading, your style of trading, and how you trade with imbalances. Some people, the whole methodology is based around imbalances. So, they're looking at specific things, and it's up to you if that's something you want to look at. And again, just going back to that volume threshold, say you only want to see, I just showed you the minimum. Now you could actually, there's people that want to see imbalances if it's over a certain amount, like say in the E-minis, if they only want to see imbalances above 2,500 lots, okay, then you'd set 2,500 in that imbalance volume threshold. Again, I know people that have, that's part of their trading methodology is specific numbers in imbalances, specific volume. So again, as a, to answer the question, should I use 400%? That's your starting point. Okay, that's where you begin. Now here another question. I trade currency futures. What is considered average delta, and above average, and how do you determine that? Actually, I left out the part. He trades eurocurrency futures. Okay, and so when you're trying to determine that, okay, what you do is you look at a chart. What kind of chart? I mean, I can't say average delta should be 300. Okay, but if you're trading, a 5-minute chart, it's it's going to be a lot different than say you're trading an 8-range chart. So for example, here, this is Japanese yen. I'm going to show you how I determine average delta. Well, I know on an 8 range chart, average delta is on a currency like the Japanese yen, average delta is anywhere between 50 and 200. Once you start getting above 200, to me that's a strong delta. Anything less than 50, if it's from plus 50 to 0, from 0 to minus 50, that's sort of this area that I consider it to be kind of neutral, in the sense that sometimes it can be a difference of 1 or 2 trades. The market was moving a little bit quick. That doesn't mean I discount it. I just keep that in my mind when I'm doing my analysis. Like this bar here has got a delta of 3, positive 3. I'm not reading too much into that delta there, because to me it sort of falls into that area where it's kind of neutral. I said if there was another 4 lots on this bid right here where it traded 8, then it would be it'd be a negative delta of -1. So you take that in mind. Some people say, "Oh, Mike, you're on crack," but that's how I approach it. But okay, so compare that, right? That's the euro currency. It's an 8 range. Mostly for currencies, I look at 8 range charts for most currencies. British pound, Aussie dollar, yen, euro currency, and compare that to. Well, I don't have a good. I said I just opened my charts here. So this is the Japanese yen. This is on a 15-minute chart. 15-minute chart, you're gonna get huge numbers sometimes, because you're gonna get. I mean, this is not a good example because it's 2 in the morning Chicago time right now, and it'd be better during the day when you got more data. But you get outsized deltas, 800, 400, you're seeing just bigger numbers coming in, when you're using, say a 15-minute chart as opposed to an 8 range chart. You can cover a lot more ground on a 15-minute chart than you're going to cover on an 8 range chart in a bar. Let me see if I got a 5-minute chart here. I'm not sure if I still got it. I might have let me just run through them really quick. I know I got a lot of charts open. I really like to push the limit on computing capacities, but I got a minute-based chart, but unfortunately it's just a bar chart. So, but anyway, you get the idea. Okay, so you look at the markets. Try and find an area that you would consider average. Try and find an area, a range that you'd consider above average. Try to find a number, for me, anywhere between 50 and 0, either plus or minus 50 to 0 is what I consider neutral. So anything above 50 to about 200 is average. Anything above 200 to 250 above that is above average. Number 3. Where do you place your stop? Okay. Well, depends how you're trading. Honestly, it's not an easy question to answer. So just pull this up really quick. So this is the Delta Scalper. Okay. Where do I place my? Excuse me. Just blow this up because here's a signal, right? And okay, well, first of all, this trade right here. Again, this market's not moving very much right now. So look at this, each tick, it trades in half ticks. So, if you're getting short off of this signal here, right, you're getting short at 77, it trades up to 79. Are you using 1 tick, or you want to use 2 ticks? Again, it's up to you. I like to sort of hide behind the high of the bar where you got the signal. Whether you're using 1 tick or 2 ticks, again, is up to you. In this case, it traded 1 tick past, from 80, what is that, 88, 78 and a half to 79, which is right here. So the high of this bar is 78 and a half. It did trade 79. If you're using 1 tick right behind it, you're stopped out. Again, I personally like to hide, give it a tick or 2. If you used 1 tick, you'd be stopped out, and then you'd have missed this move. If you used 2 ticks, you'd be stopped out. I know some people like to hide behind swing highs. To me, that's a little bit too much risk you're putting on. I just prefer like a tick or 2 rather than, a swing high or swing low. If it's not going to work out, it's not going to work out. So that's how I would approach stop placements. Now, another way I approach stop placements is by actually using the actual footprint chart, right? So let's see here. This is the Bunds. So if I have a signal, right, to get short on something, for example, is there any sort? Take for example this stack sell-in imbalance. Okay, where would I place my stop? Well, it would be right above this level. You know, say I was getting short, you know, off this bar for whatever reason, off this bar. Okay, I would obviously place my stop initially above this, the high of this bar. But then as the market starts moving down and I'm trailing my stop, I would use the point of controls, right? Because if I take a position, I don't say assume, if I take a position that the market's starting to trend down, I'm going to use the point of controls as my resistance on the move lower, you know. And like on this stacked imbalance, you know, I'm using the high of this bar, you know, as my area for my stop. So if we trade, you know, up to 14, so the high is 12, you know, if we get up to 14, I probably don't want to be in that trade anymore. I'm not going to be placing my stop up here at 21, the high of the day. No, definitely not. You know, read the order flow for your stop placements. Do I look for retracements back to VWAP? No, I don't, because, you know, people I've found have distorted the use of VWAP and just basically turned it into a moving average. You know, I read I was reading some guy's post on Facebook. You know, he uses a 30-day VWAP. I mean, I don't know. Honestly, I think that's not using VWAP. The way I was taught how to use VWAP as a trader, you know, going back to last century, you know, before the turn of the century, 1999, is to use it as a measurement of trade execution, right? You have an order, okay, and your order is to buy 3,000 E-mini S&Ps over the next 5 minutes, okay? You buy it, you compare what your execution is to the VWAP for that time period. Say you start executing it at 8:36, takes you 5 minutes to do it, you finish at 8:41. On Bloomberg, you can type in VWAP and it'll let you enter your time periods in there. So you enter 8:36, start, end at 8:41. You see the VWAP, whatever it is, I don't know, 2135.667, and you either beat it, you got a better average price, or your average price is worse than it. You know, and that's how you compare if you executed your order at a fair price. And you know, as a trader, you don't want to be losing to VWAP, so to speak. You don't want to be consistently buying higher than VWAP. Now, you know, I see people using VWAP. You know, they'll say, oh, you know, we're trading above the VWAP for the day. Well, you know, VWAP, volume weighted average price. Now you got to realize, if, you know, as the trading day goes on, VWAP will tend to flatten as you're putting in more volume over the course of the day. So if you're using entire day VWAP, it's going to flatten, and then moves that you have late in the day, you know, it's going to move further away from VWAP a lot quicker, and you're not necessarily going to get retracements back to VWAP late in the session, you know, after 1 o'clock Chicago time, you know, over the last 2 hours. And obviously at, you know, at the cash close, you're going to get a crap load of volume coming in. And, you know, it's just, personally, I don't think it's a good way to trade. Now, you know, I know if you've ever read, what is it, Hedge Fund Wizards or something like that, there was that guy Benny from Spirit Leads. I actually had the pleasure, I don't know if you want to call it a pleasure, but of getting yelled at that guy. But I used to work at Dean Witter, and, you know, we used to deal a lot with his trades. And my gosh, that guy, you know, he's not joking when he talks about you know, how rough he was on the guys on the floor. You know, like I said, I mean, he can literally berate you. But, you know, and he talks about, you know, using VWAP. Now, in that time, you know, granted, when he was doing that, that was back in the mid 90s, early 90s. Okay, and you didn't necessarily have the, you know, you had overnight trading, but nobody paid attention really that much to what happened overnight. You know, you would trade it was only trading big S&Ps at the time. This was before E-minis. So, you know, the volume for the S&Ps overnight was, what was it? You know, it'd just be like a couple thousand contracts. That's it, right? And then during the day, you would, you know, the volume for the S&Ps would be 150,000. So, you know, you wouldn't even be too concerned about VWAP from overnight. But now everything's, you know, you put in good volume overnight. Trading environments change. So, you know, really if we're looking for retracements back to VWAP, I'm not a big fan of it. I'm not a big fan of VWAP trading indicators, but that's me. You know, I mean, if some people have whole trading systems built around VWAP, more power to you. You know, the way that I've always used VWAP is contrary to how people are using VWAP today. I mean, that's just my opinion. You know, I mean, you know, I've got what I like to look for in markets, and you know, don't let me dissuade you. But you know, understand how VWAP is used and how it's calculated. And if you're using it as, you know, a measure, you know, understand that during the course of the day, you know, if you're trading, you know, a contract and, you know, 2/3 of the day is done in terms of volume, you know, is VWAP going to move very much? No, it's not. So, you know, excuse me, keep that in mind. Okay, single prints on extremes are automatic buys or sells. Again, now if you use my software, you'll notice that single prints are highlighted in the footprint chart, and it's no, where's my mouse? It's not some magic thing. It's just there to highlight to me, because you know, when you're looking at charts, okay, and if you've got, you know, more than one chart open, okay, and I know most people have got, you know, I hate to say multiple charts, but you know, 4, maybe 6. I know people, you know, screens are cheap nowadays, and you can buy you know, you can buy really nice screens for very cheap prices. You know, people got, you know, literally, I don't know, they're looking at 12 different charts, and you know, a lot of the tools that I got are there to signify, you know, things. So like this is a single print here. It's 2 lots, right? Anything between 1 and 9 is going to be a single print. And what it does, it highlights to me that, you know, there's a single print there. And what does that mean? It means there's price rejection, right? Because there's no more selling into this bid here. There's only 2 lots that trade. And, you know, is it an automatic buy? You know, generally, yes. If it's on an extreme, this is not an extreme. I don't know if there was one here. I wouldn't consider that an extreme. By extreme, I'd consider, you know, I'd say a high or a low. Let me just see if there's a better chart somewhere here with like a better example. Again, I said I just started my software pretty recently. That's just a regular bar chart. Just bear with me here. Okay, eurocurrency. Well, you know, this is crude oil. You know, it's hang on a second. Okay, so okay, here's what I could, you know, just for example purposes, am I going to consider this an extreme? You know, we had a move up here. I got 5, got another 5 here. You got 5. So these are single prints. Boom, boom, boom. It's designed to draw that circle, that rectangle around it. Red for, you know, a down bar, green for an up bar, to highlight it to me, to say, hey, idiot, don't miss these things. I like to get it with other signals. You know, is it automatic buy or sell? Nothing is automatic, unfortunately, when it comes to trading, because no 2 situations are ever going to be exactly the same. You know, I like to get it, I like to see it, and then I like to see things confirming it in the order flow. You know, like here, okay, so you're at this high, and what do you got? You got all delta. It's all negative here. I could just see it in here. I don't have, you know, just pull it up. Okay, here it's all just that negative. I mean, you got a 1, you got a 5, okay, but other than that, it's just all negative delta. You know, when I see these single prints, you know, I treat single prints as price rejection. You couple that with negative delta, you couple that with something like the Delta Scalper telling you, hey, you know, it's shifting to demand, from demand driven, right? We had just gone up, I mean, from down here to up there. You know, use it in conjunction. It's not by itself a trading system, but it's a tool to help you with your analysis. So you're getting up here, you know, okay, you're seeing signs of price rejection, you're seeing the negative delta, you're seeing the Delta Scalper coming in telling you that it's changing from a supply driven market or demand driven market to a supply driven market. That's how you use it, not just take it as other single print, get short. No, not like that. Okay, I'm confused about something. When you talk about divergences, what's it exactly? What is it exactly? Is it the change on deltas and the correlation between delta and price open close? No, it's let me get a chart here. Okay, so deltas, right? Sorry, divergence, delta divergence. So what is, there's 2 types. There's delta divergence buy, there's delta divergence sell. A sell, and this is the sell right here. It's this what do you call it, red triangle, right? you got a new or equal high right here. This green line is my high. That's how I can tell it's a new high for the day. And you got negative delta. That's it, right? You have a down, you have a new high and a negative delta. Now, my software, the Orderflows Trader software, takes it a step further, right? I want also the price action of the bar to be down. You know, I don't want to be taking a divergent sell on a up bar, you know, on a green candle as the market's still moving up, because, you know, normally this would be a divergence. This bar right here is a green candle, and we got negative delta, and it's a new high. Technically, that is a divergence. Now, on the Orderflows Trader software, my software, as far as I know, I'm the only software that does it, is if it's going to give you a sell signal, the bar has to be red. You're not going to get a sell signal on a green bar. Why? Because if the market's still moving higher, you know, it can move higher on negative delta. You can have negative delta and the market go higher. People will say, well, how can you have market go higher if you have negative delta? Well, if you have bidding coming in, you know, buyers are working bids here, supporting this market, sellers are selling into it, you could end up with negative delta, and that's actually a bullish sign. So I want things to be negative. You know, I want the negative delta, I want the bar price action to be down, and I want the new high. You know, that's, for me, on my software, that's how I define the delta divergence. Now, I said, you know, on a lot of software, this would be considered a divergence, but it's an up candle, right? So I'm not interested in it. I'm interested on down candles. Now, this other bar here, you have positive delta and an equal high. There's no divergence here, so you don't see this over here. This is something else. But the reason why is because you have positive delta. Okay, so that's how it's figured out. It's just basic, right? It's a new or equal high, and with negative delta, that would give you a divergence, sell divergence. A buy would be opposite. A buy would be a new or equal low with positive delta. It doesn't, you know, there's no other fancy calculations in there. It's got nothing to do with the open and close of the bar, or correlation between deltas and the price open close. No, it just takes, you know, is it a new or equal high? Yes. Okay, is that one? That's one condition met. Is the bar, you know, is it a red candle if it's on a high, or a green candle if it's on a low? Okay, is that condition met? And, you know, what's the delta? You know, is it delta positive or delta negative? That's how it's calculated. You know, this one is kind of a sore point. Do your indicators like Delta Scalper have sound alerts? You know, when I say it's a sore point, is because, you know, most people nowadays, you know, I said, you know, personal computers, trading computers are relatively inexpensive, and hang on a second. Sorry about that. I was just interrupted for a second. So, you know, when I say, you know, this is a sore point, right? What I mean is, you know, if you're trading more than a couple contracts, a couple markets rather, and everything's got sound alerts, it's going to get very confusing when the markets start to move. And, you know, I say that because I've worked in places where I literally am managing, you know, whole books, you know, books from the US or books from London, trading books, and, you know, people would send me a file on Bloomberg. Okay, here's all the alerts. There'd be 60 freaking alerts in there, and, you know, the tsunami happens in Japan, and boom, every alert in the order book goes off, and, you know, you're scrambling to see, you know, you get pop-ups or you hear sounds, and, you know, you're in fast market and you're just closing them. You know, I find it just, you know, I said, if you're trading one market on one time frame, okay, sound alerts is probably going to be useful to you. But if you start trading, you know, S&Ps, you're trading S&Ps on a 4-range chart, you got a 10-range chart, you got a 1-minute chart, you got a 5-minute chart, times that by bonds, 5 years, crude oil, eurocurrency. Next thing you know, you got 20 different alert levels, you know, things that can go off. And, you know, you'll take the first one, and often you'll miss the second or third one. And, you know, it's to me, I just find it counterproductive. Okay, now some people, you know, one guy sent me a nasty thing. Oh, you have a sound alert file name here. It doesn't work. Your software isn't complete. Well, you know, we had this in there, you know, because I was going back and forth with the programmer. Do we want it? Do we not want it? If you want it, I'll put you in touch with my programmer. I have done this on several cases, and, you know, you work with my programmer. You know, he'll charge you a small fee to enable it. You know, I don't know if, you know, he's still interested in doing it for NT7. For NT8, he might be interested, but again, you know, it's, if you're trading, you know, 1 or 2 markets, okay. You know, me personally, I don't like to have it. should I have it as an option in there? Yeah, I could. I just didn't, because that's my own experience. And again, my indicators are based on my own trading experience, right? I don't take other people's ideas and pawn them off as my own. So that's why I don't like to use the sound alerts, is because the way that I trade, I just don't find it useful, period. Okay, that's me. Throw your stones at me, whatever, call me all the nasty names you like, but no. So the answer is, do they have sound alerts? No. And again, that's if you're using one indicator. Say you've got, Delta Scalper, price rejector, and, one or two other indicators, and they all got sound alerts. Next thing you know, like I said, you got 20 different charts open, 3 different indicators, all of a sudden you got 60 potential alerts going off. Is that what you want? Maybe, I don't know. Like I said, but if you're just, if you say you're just a crude trader, trading an 8 range chart, that's it, that's all you're trading, okay, maybe it might be helpful to you. I admit, in that case, it would probably be helpful. I'm just saying from my own experience and how I trade, for me, it's not helpful. This is another question. Why does my chart look like yours? All my ratios are blue. And let me pull up the chart really quick. This is a question. I mean, it's kind of a redonkulous question, but it is a question that came up. Okay, so here it is. This is, these are the ratios, right? You got blue ones, you got black ones, blue ones, black ones. If it's a down candle, if it's a red candle, the ratio will appear on top. If it's a green candle, it'll appear on the bottom. If it's a doji candle, it won't appear, because for me, for order flow, I personally find doji candles, bars that open and close at the same price level, for me, in my own analysis, I treat them as kind of neutral. But so like I said, there's blue ones, there's black ones, there's black ones, there's blue ones. Blue ones are the ones that are actionable. Black ratios, black numbers, are just the average order flow going through in the market. And so the question was, hey, my chart doesn't look like yours. Why, all my ratios are blue. I want a refund. Your software doesn't work. Well, the reason is you didn't take the time, one, to read the user manual, or understand that what ratios are. I've got what I call ratio bounds high or ratio bounds low. Ratio bounds high indicates price rejection, or ratio bounds low indicates price support. And the number 28, number 0.699. So if it's above 28 for ratio bounds high, it'll be blue. If it's below 0.699, anything between 0.699 and 0, it will be blue. Okay, if it's 0.7, it'll be black. If this comes in at 27.9, it'll be black. Again, are these lines in the sand? No, they're not. They're ratios, and take them in context with the markets you're trading. These are the numbers that I use for all markets, actually. So these are my guidelines. I actually used to use 25. I used to use 1, but I've sort of refined it over the years to 28 and 0.699. Now that doesn't mean to say that if the number is just right on the border, say it is 0.7, right? Like this is 0.51, it's blue. So if it's 0.7, does that mean you can't take the trade? No, of course not. You could look at it, use your brain, and decide, do I want to take that trade? So again, just to come up with another question, a guy sent in, says, your chart doesn't work. Okay, I want a refund. And then it says, all I got is on my screen is white. Okay, well, you got to center your chart, right? Like, for example, go here, where's Japanese, he sends in the chart, where we're trading, and this is what his chart looks like on the Japanese yen. The handle, that price axis is, 87.70. All you gotta do is press this to center your chart, and it pulls it back in. Sometimes the chart runs off the screen, or, first time you open your chart, it's not centered properly. You center it, period. I mean, sometimes, people, I hate to say this, but, they don't want to just take the next step. I mean, yeah, I understand, sometimes you need hand holding on new things, but, part of being successful in any line of business is, whether it's trading or whether it's working at McDonald's. If you work at McDonald's, you see fries are low, you go make more fries. You see the ketchup dispensers out, don't wait to be told, hey, fill up the ketchup. Take some initiative and do it, but okay, I said if you're the person that doesn't want to fill the ketchup, we're probably not going to get along very well. But if you're the person that wants to take initiative and learn things, I get a lot of emails from people saying, hey, I like your software, look at it this way, let's look at it this way, giving me suggestions. That's what it's about. It's about exchanging ideas, rather than just sitting back and being told what to do. So I don't know. That's just a personal issue, personal thing. I said traders need to be naturally inquisitive, right? And it doesn't mean you want to take apart a watch and put it back together or something, but at least try to learn the software, learn what you're looking at. It's a lot of information, but if you spend a little bit of time of each channel, I mean you have to jump right in and learn everything there is to learn about order flow, but rather just ask yourself questions. What's happening when you come down, right? Like here, you sold off a little bit, now you got some aggressive buying, you got a stack buying imbalance. What does that mean? Rather than just flipping through the book, okay, well, I got a stack buying imbalance. The best traders are the ones that see things happening in the market, okay, and try to figure out why it's happening and understand it. I mean, that's what trading is about, to be successful. I mean, the most successful traders understand what's happening in the market. They don't just take a signal without understanding why it's happening, right? It's not like, oh, hey, there's this, I'm supposed to buy because you have a stack buying imbalance. Well, no, they know that it's coming down. You have the swing high, we're coming down, you got some aggressive buying coming in, and you can see how this move is short-lived. But if you're just taking, say, hey, I got a stack buying imbalance here, market shot up, okay, but then it failed. Well, why did it fail? Well, look at the volume in this bar. It's pretty light, you had stack buying imbalance, 0 against 8, 0 against 10, 0 against 29. So, it's just sort of a snapback, and it's probably going to be short-lived. And what happens is the market sells off, and, it would have gone and stopped you out, had you gotten long here. This is why, when you're talking about imbalance volume thresholds, right? If I had this one set at 50, these imbalances would not have shown up. I have this one set at 1. So actually, if it's 0 against 1, it'll show up because it's 0 against 1. It's just, that's just the way the computer program reads it, rather. But, 0 against 8, 0 against 10, 0 against 29, to me, that's too light to have a nice stacked imbalance. Really, I set it to 1, the volume imbalance threshold, as opposed to 50 on this chart, is because, sometimes, it could be 25, 37, 42. I'd probably like that imbalance, but again, 0 against 8, 0 against 10. To me, I'd probably discount this buying imbalance as being a strong buying imbalance. Next question: are your indicators compatible with Bloodhound? We're working on it. The problem is I'm in Asia. The guys in Bloodhound are in the U.S. And for me to be able to talk to them, I have to do it late in the midnight time. My time, and it's not easy for me because I got 3 kids and a wife who thinks I'm the devil. So she anyway, no comment on that. But yeah, I'm working on it, and I want to get everything compatible with Bloodhound. Do I still have a trading room? No, I've shut it down for now. I don't know if I'm going to reopen it. It's Ninja Trader's going through a lot of changes, and they're really I don't know. It's one of those things where, do people get value out of it? I'd rather, make videos, for everybody and post them online so people can watch them when they're free, because, not everybody could attend a trading room and not everyone watches the replay. So maybe what I might do for members, I think, is create members only recordings, which will be different than the recordings that you see on YouTube, but we'll see. But right now, the trading room is not open, and I'm not sure if it's going to reopen. So, those are the 10 questions. So, if you want to learn more about order flows, you're interested in my software, you go to orderflows.com, or you go to deltascalper.com to, read more about it. So, thanks, and, I hope I didn't offend anybody in this video, but, I try to answer these questions. Some of them I think are, kind of basic stuff, but it's basic for me. But if you're new to order flow and this form of trading, it may not, it may be new to you. So sometimes I I forget that you know, people are new to this form of trading, and sort of you know, you take it for granted that people know stuff, and they really don't, and it's just, you know, what to do. You know, that's why I try to create these videos. So it'd be easier for me sometimes, you know, to answer them in an email or create a video. I don't know which is easier, but again, you know, for people sometimes, you know, they're afraid to email questions because they don't know me. But you know, most of these questions came from people that I already know, that are using the software. But you know, I said it's one of those things. Again, yeah, another question: do I offer a free trial? No, I don't offer free trials. So don't email me asking for free trials. And then get angry at me that I don't give you a free trial. I don't give anybody free trials anymore. So it's just too hard to manage all these user IDs and who's paid for things and who's not. So thanks everyone, and bye bye.